Alright, I got a fun one today. Inflation, debt, spending. It's all over the news, all over the internet, it's all over YouTube. I'm seeing countless video after video about this stuff, but do half of us even know what it means? Or is it just some old reptilian money terminology? I'm kidding. I'm joking. Don't eat me, reptile overlords. Okay, so let me break it down in the simplest way possible, using a couple of columns and some basic logic. In the first column, I have $1. It's an absolute value. In the second column, a gold-backed dollar. So for every dollar here, there's a proportional amount of real-world assets, like gold, giving it its value. Third column, fractional reserve dollars, or fiat currency. That is the system we're on today, pretty much globally. So here you also see the reserve ratio. The Fed, or national banks, they set this based on how much growth they want to see. Here, it's set at 0.464, or 46.4%. What does this mean? It means that for every dollar deposited, the bank must keep approximately 46.4 cents in reserve, and they can lend out the remaining 53.6 cents. Here, you see the growth factor. What's that? The growth factor is the multiplier derived from the reserve ratio, and it determines by how much the total money can grow when it's lent out and redeposited using the rules of a magical banking system. So, if the growth factor is 2.15, it means that for every dollar deposited and then loaned out, the total money supply can grow exponentially by about 2.15 times through lending. Now watch what happens when I drag these columns down. Do you see that? That's wild. The absolute and gold-backed dollars, they stay the same. Whether it's $10 or $100, it doesn't really matter. The number of dollars is limited by the real assets that are backing it. That means that the value stays stable, like a stable coin. But look at column 3. I turned $10 into more than $1,000. Wow. Fractional reserve banking. What the f is that? Huh? Well, fractional reserve banking sounds fancy, but it's just compounding for banks. It's how they earn their dough. All it means is banks only need to keep a tiny fraction of your deposits in their coffers. The rest is loaned out. And then guess what? This creates new money out of thin air. Well, here's an example. If a bank gets $100, they only need to keep $10 on hand and then lend out $90. That $90 gets deposited in another bank, which keeps $9 and lends out $81. This keeps going on, creating a lot, and I mean a lot, more money than what was physically there. That's why the money supply keeps growing, even though there aren't any real goods or services in proportional existence. This leads to a surplus of dollars. And what is a surplus of dollars? It's inflation, stupid. So, why do we do this? Where does this new money come from? Well, it comes from the future, actually. Banks lend money assuming that the money they lend will be used for productive things, like producing pornography, or other things people find value in. And yes, I think simps are people too. I think. People trade their future in order to purchase goods of value in the moment, creating profit for the business that generated that piece of value for them. The producers in turn use a chunk of that money to pay back the banks that they borrowed from, with interest. And therein lies the catch. When you borrow, you're selling a piece of your future to be able to do business now. Now, what about governments? They're doing the same thing but on a much bigger scale because, guess what? They've got more futures than anybody to sell out. They're taking out loans and passing the bill onto future babies and babies of babies. That's what's been happening. Social Security is about to run out for Grandpappy. But if we keep pumping these debt bubbles, there won't be enough resources, even in a million lifetimes, to pay it all back. And that's when things are gonna get really, really bad. Debt is not some inherently evil mechanism. It's a tool. It's helped us grow, build, and innovate. But treating it like an infinite money glitch, that's dangerous, especially when governments are so loosely reliant on debt. Remember, debt only works as long as the future can pay it back. And these days, the future is looking a little bit bleak. End of Roman times kind of bleak. Like, no one wants to have families and babies kind of bleak. So, we're supposedly having to import some very destabilizing forces kind of bleak. Now, we're feeling some of it with some of these rising prices and stagnating wages. So, while debt can help fund growth, playing the infinite money game has its limits, ironically. Namely, when the majority can no longer afford to live and pay their obligations. That's when this game stops and the consequences start to hit. Understand the game, because in this system, not everyone is set to win, but we are all forced to play. Thank you for watching. Don't forget to like, comment, and subscribe.